And then at number 1, which I'm just going to touch briefly on it, is Capitec at positive 104% and
104%.
0.45%.
Man, you deserve some bells, man. Like
I do.
Incredible pick.
It's fantastic, man. And just a word on Capitec, a seismic shift happened within the lifespan of the company. The chief executive officer, Mr. Gerrie, who was one of the co-founders of Capitec, retired, announced his retirement.
When is it effective?
June,
okay,
if I remember correctly.
And who's the next guy?
Graham, I forget his surname, but it's Graham something.
Yeah.
And then
he was part of the team, or is outsider?
No, so he was part of the team, but he's just not a co-founder. So he's not part of that core, but yes, he's not something.
He knows the business.
Yeah, he does. But yes, like that's a seismic shift.
Welcome to the Investment Candle Podcast, episode 19, and we're here. Of course, I don't roll alone as always. I've got my brother Nick. How's it going, man?
Man, things are going okay. It's been a while.
You look like you're so cold, man. This big, huge jacket.
I do. I won't lie to you. More than anything, this jacket is not for warmth, but for style.
Oh, is it?
Is it? Yeah. I was telling my wife this morning. I was like, listen, I need to dress up and to look good.
I need to get used to you saying I was telling my wife.
Yeah. Yeah. But no, man, I'm good. I'm excellent. It's been a one hell of a week.
Yeah.
Bafana is doing quite well.
Yeah.
Which I'm really, really happy about. And we have a cool guest today.
Yeah.
Yeah. So
do you want to introduce our guest?
I will introduce him. I'm going to read his profile, but I think I'm just going to mention some interesting things which I find interesting about the guest.
Okay.
So we have Jacques Smith.
Just for the record, I know nothing about what he's gonna say.
could be anything.
Could be anything. I just need to put it out there.
No.
We did not prepare this together. You know,
keep the guests on their toes.
I'm gonna read out his profile. And if you want to read his profile, you can follow him on LinkedIn. We'll throw in the link in our below the description of the podcast. Okay. But we have Jacques. And Jacques is the founder and chief investment officer of Cenote Capital. We're going to speak a little bit about his entrepreneurial journey because he's a founder. And he's an investment manager dedicated to private clients and the unique requirements. Cenote Capital provides tailored financial strategies and unique investment opportunities. We're going to speak about those unique investment opportunities with the goal of preserving and growing wealth with discretion and expertise over the long term. Jacques holds a BCom honors in investment management and masters in finance, specializing in portfolio optimization. Got his honors at UJ. I went to UJ. So that's the first interesting thing. Then he got...
But he does have some UCT thing, just so it out.
Oh, you guys...
Yes, that UCT in finance.
Exactly.
It is a key. It's key.
Nah, it's overrated. I'm joking. But he's deeply passionate about building enduring relationships and believes the strongest connections, much like compound interest, grow richer over time. So that is Jacques. That is our guest today. We're going to be chatting about a lot of international dynamics. There's some international shares. I'm keen to, just basically to get his perspective on.
Yeah. How's it, Jacques? How are you doing, mate?
Yeah, I'm good. It's I think everybody's, it's end of March. Yeah. This year started with a bang. I think everybody breezes into January and then you realize, geez, this, we're already at the end of the first quarter.
Exactly.
Yeah.
And it just flies.
Time flies. And I guess when you're busy, time flies faster.
Yeah. Exactly.
And I guess when time doesn't fly, it means you're not busy. So I think it's good when we're busy and when time flies. But we're already at the end of March and here we are. So it's been a good start to the year.
Yeah. Makes sense. And what sports do you typically follow? I mean, we chatted a little bit offline about rugby. What other sports do you follow?
I mean, I think as a South African, rugby's in our DNA.
Exactly.
We're born with that.
And who do you support? Cheetahs, lions, blue bulls.
It's an interesting one because I'm originally from Joburg, born and bred in Johannesburg. But I went to school across from Loftusversveld. So I'm actually a lion.
Okay.
Okay.
All right. Never saw that one coming.
and then that's my blood. Alice Park, that iconic 95 Rugby World Cup. Joel Stransky kicking.
The drop goal.
The drop goal. That for me is rugby. But then went to school across from Loftusversveld, and it was almost expected to be a blue bull. So I disguised the lion.
Controversial. What a controversial start.
And then I disguised the fact that I was a lion, went and watched Blue Bull games. A lot of my friends actually went and played for the Blue Bulls. I mean, it was just this natural transition from high school across the road to the Bulls. And then now I'm in Cape Town. I've been living here for 6 years, and
don't tell me you've changed.
I haven't changed. But I think being a South African, I don't think there's any. You don't have to be ashamed to support different teams. You know? I think it's you watch rugby for the sake of rugby. And then you've got so many good South African rugby players playing abroad.
Indeed.
Such good talent. In Scotland. In France. So I think rugby is just all over, and then we've got Drickus obviously representing us in the MMA space.
Of course,
so I think South Africa is just so multifaceted when it comes to sport. And we're such a proud sporting nation.
That's true.
Here's an interesting thing, and I'd like Jacques to speak about it before we get into the nuts and the bolts. You played with a World Cup winning Springbok. Who is that World Cup winning Springbok? And can you just give us a quick anecdote?
So I mean, I'm not the biggest chap out there, but like I said, I played rugby in high school. I was a scrummy, bit of fly off. That was my position, and I was fortunate enough. And I always make this joke. If it wasn't for me, Ergia Snyman wouldn't have been the guy that the player is today.
It's because of you, Jacques. Okay?
Because of me.
Yeah.
Absolutely.
Definitely.
And I was fortunate enough to play trials with him. So never first team rugby, but I ended up in this trial team, and I called Ergia before the game started, the match started. And I said, Ergia, when I've got the ball, just make sure you're next to me. Because I'm going to give it to you. And I mean, every time I just passed the ball to Ergia.
Amazing.
And he went and scored a try. And that was exactly like the try he scored against England in the semi-final. It was like a replica. So we trained him from an early age.
That's a good one.
This is amazing.
I think it would be interesting to delve into some of these aspects. But Nico, do you want to take us away with the portfolio check? So Jacques, for your benefit, what we do is that we run a live portfolio that the guests follow us. Through that portfolio, we've got stocks that Nico has selected, I think 3 or 4, and then I also selected 3 or 4. So we kind of curated that portfolio together, and we ran it live. We show all the returns, we show all the movements, additions, divestiture, whatever.
Very cool.
Cool. Let me just get going with the overall performance of the fund. We are at a positive 28.04%. We've gone up.
Is that since inception, or is that 12?
No, 12 months, bro.
Okay.
We are
good.
we have outperformance of about 200 basis points, which is great. That's what we want. We want outperformance over and above the benchmark.
Is the JSE at 26?
Not the entire JSE. It wasn't the all share. I think it was the top 40.
Okay, but we chose the all share.
Yeah, we did.
Yeah.
But I think if you look at the composition of those shares, they mostly really dominated on the top 40.
Agreed.
Yeah.
Agreed.
So
the top 40 is at 26.
It's about 26 for the last 12 months,
That's impressive.
It's impressive. In fact, if you look at the overall since inception, it's hitting records. Last week it hit a record, the all share, which is nice. Yeah, I mean,
but I thought the equities are taking a hit, so especially South African, given what's happening with the US since Donald Trump took position. I thought we were getting hammered. I mean, I would like to see what it is year to date, from January to date.
Yeah,
but anyway,
maybe.
go on.
Yeah, maybe. But I mean, like,
but 12 months basis, that's solid.
Sometimes there can be a dislocation with how equities perform with other stuff as well.
Of course.
That is influenced by geopolitics, of which I'm keen to get into that with Jacques. But the worst performer is Anglo. Anglo, it's at a negative 4.23%.
Yeah, I think that's going to take time, given that there's a demerger from Anglo Group. They want that company. They want to get rid of the company. So I think that's still going to take a little bit of time to see exactly what the company is going to look like, what they're going to do with it, who's going to buy it. So all of that is still very much in limbo because there's a demerger that is on the thing. So that's why. Yeah, I'm not too worried about it.
Not too worried about it. Yeah, it's been negative for long though. But anyway, we're moving forward.
You just had to throw in that one, yeah.
Then we've got.
But yeah, Jacques. By any means, if you've got comments in any of the stock that we're talking about, just jump in. Yeah,
yes. Cool. Then we've got Sun International at a positive 3.51%. Very muted.
To be honest, I didn't really think Sun International was going to do it. When you picked it, I was just like, here we go.
Yeah. No, like, I remember I explained it. I think it was episode 12 or something like that with Boitumelo. We'll verify that. I mean, with Sun International, there was two things that underpinned my investment thesis. And that was basically the post-COVID recovery of opening up the borders for international travelers and also for the South African short-left travelers. Very, very robust. But most importantly, it's their gaming business, which I remember the article that was released by MoneyWeb, which says Sun International's betting bonanza. That really encapsulated what was happening in the betting space.
Have you seen that there's been quite a lot of growing concern around betting and gambling in general, given the statistics around just from the figures that people spend as percentage of their income and also the like. So it's there's a even some NGOs are kind of jumping onto this wave of raising awareness of gambling.
It's a difficult one for me to square, and I'd like to get your opinion on it as well. In that, morally, as well with these betting companies, it's not just South African companies.
Yes.
Also in the United States, England, I think around the world. You want to offer entertainment product for people, and yes, it happens to be very profitable. But then also there's also that thing that, are people overdoing it? Are they spending too much of their income to the point where it's irresponsible?
Of course.
But then I can take that and I can apply it to your company as well, British and American Tobacco, where there's real physical, let me say, non-benefits of consuming those products. Same thing with alcohol. So like, where do you draw the line?
Yeah.
And as an investor, what do you do? Basically, what do you do?
I think the call on that is they want more regulation around it. I mean, alcohol is highly regulated.
Yes, it is.
The tobacco industry is highly regulated. Even now that there's move towards green economy and all of that. So the American-British BET and what's this other one, Morris and something, they're kind of coming up with products that are more environmentally friendly. So you can think about how the regulation could potentially come on that front from gambling perspective. I think that's the call. They're kind of asking for the government to intervene and institute some of the regulation to kind of protect the consumers from self-harm. I mean, it's addictive, this thing, right?
Yeah,
of course.
I'm keen to also get Jacques' perspective on morality and investments. Do morals have a place in investments?
Well, I think this discussion is so interesting because it's a philosophical discussion.
Yeah. Exactly.
And I mean, are governments actually allowed to impose restrictions on individuals how they want to spend their money?
Yeah.
Yeah.
And I mean, that's such a philosophical, moral topic. And I mean, that's why these businesses, gambling And I mean, within gambling, we can talk about sports betting.
Yes, we can.
Yeah.
We spoke about Sun International. They've got the casino business. But I mean, the growth of Betway, sports betting,
Hollywood bets.
I mean, there's so many out there.
Yeah.
And it's so accessible. You literally download an app on your phone. You deposit money in there, and you can bet on anything.
Exactly.
On anything in the world,
basically.
and I think the big takeaway for me is the house always wins. So whatever betting it is, the house, you rig to lose money in some way, shape, or form.
Yeah.
I mean, it's such profitable businesses. I mean, in the US, you've got DraftKings.
Yes. FanDuel.
Such good businesses.
They're great.
But you see that government in the US, I mean, it's banned in so many states. And as that moral discussion continues, I guess you either see whether it's more accessible or less.
Yeah, I think what is interesting about gambling is that there's always enough market for everyone. I mean, how many new gambling companies have we seen, especially online gambling, right?
I've seen a few.
We've seen quite a few that have entered the market.
Yeah.
In a second, they become huge companies. They're sponsoring all of this. And also just the incentives that they provide to consumers to actually lure them. There's this thing called bonuses when you enter, where they like give you 2 times X the amount that you deposit. They know you're going to lose it. So it's just all these incentives that actually lure people into, you end up spending a lot of your money. There's restrictions around withdrawal and all of that because, I mean, if they double your deposits, you can't just put money in, withdraw all of that. But those are nitty-gritties. But what's interesting for me is that every time there's a new gambling company, it always grows. They hardly fail. You know, unlike any other normal business. Which is interesting.
I think my last point here, just putting on my investor hat on, just the market participant hat on, is that I agree with you, and I agree with the calls for increased regulation when it comes to these companies. Great businesses, very, very dynamic. But how I see as far as indicators on whether a system is overheating is when you get a mushrooming of these companies coming up everywhere. Because everybody sees that, oh my word, this is a nice way of actually making money quickly. So I call for some sort of regulation to cool it down, to make it a little bit, to create some barriers to entry, to cool down, because I think it's overheating. Or rather, let me not say overheating. It's hot. It's very, very hot.
It is.
And I like the system. So I want the integrity of the system to stay in shape. I think Sun International is a good business. And the nice thing about Sun International, which I can more or less have a bit of confidence as an investor, is that I know Sun International, number one, is a JSE listed company. Very transparent. I look at their financial statements. They're governed by the king, recommendations of corporate governance, that type of thing. But then these private companies, of which I'm not really quite sure what's going on in those private markets, I'm not sure. So I think maybe I'm keen for a bit of regulation
on that front. But do you think they're taking market share from the gambling business of Sun International? How do you think they compete? Have you kind of looked at that, checked that?
No, I haven't. But it's something worth going through. Yeah. Yeah. Okay. So moving forward, then we have ShopRite. ShopRite. Can we not speak about ShopRite? We've spoken about ShopRite to death.
Jacques, it's a great business.
It's a wonderful business.
But I feel like they didn't have ShopRite in their portfolio. Like,
yes. I think it's fantastic, guys. It's great.
And who doesn't use it every day?
Who doesn't use it every day?
I mean, 60/60
is such a fantastic thing, you know?
It's Fresh X.
Exactly.
They cater for everyone.
Yeah.
Which part of the market don't they cater for? I think maybe that's the question. But
it would be interesting to see now that Boxer is actually listed separately from Pick n Pay, to be quite interesting to see the actual numbers for Boxer, because Pick n Pay used to hoard them, right? And we knew that Boxer was the guy that was funding Pick n Pay growth, right? So it would be interesting to see now, to compare and contrast between you say, for example,
yes,
and ShopRite compared to Boxer, because they are kind of like catering for the lower LSM. So it will be interesting to see how that competition unfolds in all this.
The year-end results, I think they come out in May. I know this because I have shares in Boxer.
You got Boxer?
Yeah, I do. I do have.
You got some Boxer, eh?
Yeah, ShopRite is at a positive 19.81.
Okay.
And then we have a very...
Wait.
Yeah?
So the first one was...
The first one was Anglo.
Second one was... Which was a negative.
Yes, Sun International.
Second one is Sun International. Now we're at ShopRite.
And then...
so we have about 8 stocks in our portfolio, right? Isn't it 8 or 6?
1, 2, 3, 4, 5, 6. We have 7.
7 stocks. And ShopRite is number 3 from the last. And it's at 19% return.
Yeah. Dog, it's a decent portfolio. It's a very, very decent portfolio. And then we've got British and American Tobacco at a positive 21.42%.
Yeah.
British and American Tobacco, which you are very vindicated about that. And then from British and American Tobacco, we get to the top 3, which we have Naspers at a positive 35.12%.
35% Naspers growth.
Yes. Thank you so much, Fabrizio, the new chief executive of Process. Because, they get most of their value from Process, which in turn gets most of the value from Tencent. And then we have Discovery. Fantastic. Which I think for me, as far as performance improvements, Discovery is the guy. Discovery is at a positive 37.06%.
I sold Discovery actually.
You did?
Personal. No. I just cut a little bit. Just reduced a bit.
Okay.
Yeah.
I want to say good decision, but I can't do that.
I mean, you can never know, but...
And then at number 1, which I'm just going to touch briefly on it, is Capitec at a, positive 104%. And
104.45%. Man, you deserve some bells, man. Like,
I do.
Incredible pick.
It's fantastic, man. And just a word on Capitec, a seismic shift happened within the lifespan of the company. The chief executive officer, Mr. Gerifori, who was one of the co-founders of Capitec, announced his retirement.
When is it effective?
June, if I remember correctly.
And who's the next guy?
Graham, I forget his surname, but it's Graham something.
Yeah. And then he was part of the team, or is outsider?
No, so he was part of the team, but he's just not a co-founder. So he's not part of that core, but yes, he's not something.
He knows the business.
Yeah, he does. But yes, like that's a seismic shift because he was the last remaining one of like the OGs. The original
founding team.
Yeah. So Carl Fisher's gone, Rian Staussen's gone, Michiel Leroux is gone, and now Gerifori is gone. And now Capitec is gonna have to like really, really mature. Same thing with Discovery. When Adrian Gore and Barry Swartberg goes, then we're gonna see like really what are you? And if they can actually survive. Because some businesses, they're so dependent on the founders themselves.
Pick and Pay.
Like Pick and Pay. There we go.
And I mean, those founders are integral in the DNA of the business.
Exactly.
Yeah.
I mean, it's integral. So do they keep that direction?
Yeah.
And I guess with those businesses, the foundation is solid.
Yeah.
Yeah. But I think what's important is, are you training your team well enough to take over?
Yes.
Because then that speaks to the investment of the business into its leadership, right? So if that's not happening, then we'll see the mess that is happening at Pick and Pay now,
Yeah.
So that becomes an issue.
Yeah, and I mean, a transition period is always, there's uncertainty.
Lots of it, yeah.
And markets don't like uncertainty. And I mean, you see that with, Bezos and the big guys in the US, where those founders sort of stepped away, bit of transition. But the brand is still there.
Yeah. Yeah, no, mate, that is the portfolio. We're doing quite well.
Man. And overall, we're at 28% return.
Yeah, 28%. It's not bad.
For every 100 Rand, you get 28 Rand. That's good.
Not bad at all.
That's really good. But anyway, I think the purpose for today is to actually touch on it a little bit on some of the stuff that is offshore. I think we've got Jacques here. I think before we delve into your expert field, it will be interesting just to touch you a little bit about where you come from, basically. I think you've touched on a little bit that you went to school in Pretoria. Just an elevator pitch on, just to see if there's anyone out there that relates with you.
Absolutely, yeah. I think background and who you are is so important, because that shapes where you're going.
Exactly.
Yeah.
And understanding people and where they come from is vital in today's world. So, I mean, originally I'm from Joburg, born and raised there. Went to primary school in Joburg, and I really wanted to go to boarding school in Pretoria. And my parents gave me that opportunity. They said, "Listen, you can become a boarder." So I went to all boys Afrikaans school in Pretoria. Yeah. Learned a lot of discipline there, which I think was critical. Made good friends, good connections. And that was sort of that transition to the University of Pretoria, because all of my good friends and the connections you form and the relationships you build go to UP. It was to Tux. It was sort of natural.
Yeah.
Had a great time there. Went to boarding school, Ores. So used to living with people and the dynamics of staying with people constantly, which I liked, and that really forms good connections when you spend a lot of time with people.
Yeah.
And then after 3 years at UP, I got the opportunity to do honours at UJ. So decided to go back to my hometown, Joburg.
Yeah. So you betrayed tax, basically.
Look, it was a great place, and I still love Pretoria. It's such a cool city, and people are, it's really solid people. But decided to go back to my hometown, Joburg, Auckland Park. Great campus. Did honours there, and really found it very practical. Where at UP it was very theoretical. Gave you thick textbooks. Where at UJ they said, listen, let's actually start building models. Let's start looking at the actual market. Let's get away from the textbooks.
Yeah.
And I think that's so important in today's world, because there's so much theory out there, but we tend to neglect the application.
Yes.
We want to study all the theory, and then when the opportunity comes to apply it in practice, we don't have that skills.
Yeah.
So that really taught me the practical side. Started out at a big corporate in Joburg, where I think a corporate learns you a lot.
Yes.
You learn a lot about how that corporate system works, how it functions, how the business makes money. And, also then went to a much smaller boutique asset manager where I had a great mentor. And had the opportunity to work with a founder and with a partner of a business.
Wow.
So you had that corporate side, which is a big animal of a business, which does very well, and you've got a lot of people there.
Yeah.
But you just another component in this big machine.
Yeah.
Then went to the smaller firm, which has that same processes, but had the opportunity to work very closely with a mentor. In the back of my mind, I always wanted to study further. My parents said I had to work and apply get the practical skills. But then got the opportunity to do a master's in Cape Town at UCT, and I said, listen, this is a great shot. We moved down, and I basically had funds for 1 year to study.
Wow.
And I told my professor, listen, I've got 1 year.
This is it.
This is it. And he said, no, some people do the masters over 3 years.
Yeah.
Like, nah, I've only got 1 year.
And why do you want to do it so quickly? Because you need to spend a lot of time on your thesis and really understand the research. And I said, listen, I can do this in 12 months. Then I need to start working again.
Yeah.
And I really put my head down and did, gave it everything. And I submitted the the thesis and the coursework in 10 months.
Cool.
Wow, impressive. I'm struggling with mine, so I guess we can talk offline.
Yeah, and look, I think the coursework side of a master's is you still have that structure where somebody tells you there's a class and an assignment, but then you tend to forget about the thesis. And nobody put pressure on you to actually submit it.
Yeah.
That's in your own hands.
Yeah.
And that's where I really, realized that if you want to study further, you also have to have this passion of the field, because that passion pushes you to ask the critical questions. So as Prof said, listen, you don't do a master's because your parents told you to do one. You do it because you've got passion.
Yeah, 100%.
And I mean, after that, really got back in the industry, worked at a corporate again, learned a lot, and recently at a smaller boutique firm where I had a bit more responsibility on the research side.
Wonderful.
And that's really where I decided to give it a shot and start my own thing.
Okay.
I think that's the background basically.
And how long have you? His own thing is referring to Cenote Capital right now. How long have you been on your own?
It's still very fresh. It's young. Cenote Capital, probably going for a month or two now.
Wow. Okay.
But the idea has always been, since growing up, being a youngster, I always had that entrepreneurial drive. Sure. I didn't know what it was going to be. If it's having a restaurant or your own business, I didn't know it was going to be in the investment space, in the asset management space. And I think for me, the combination of being an entrepreneur and blending that with investment management, I'm so privileged because it feels like I wake up in the morning and I'm not going to work because
I'm
doing what I love. It's my passion.
Yeah, makes sense.
And I'm very fortunate to have that played out.
And as far as Cenote Capital, Jacques, if I may ask, how have you positioned it? What's the gap in the market that you wanted to exploit?
I think before that question, it would be good to just speak about what Cenote Capital is. Is it? Do you raise money from retail investors? Is it institutional money that you're managing?
Absolutely.
To touch on that.
Yeah, it's a great question. So Cenote Capital is a boutique investment management firm, based out of Cape Town, South Africa. And the primary purpose of Cenote Capital is to provide global investment advice and expertise to South African investors. Okay. Predominantly higher net worth individuals, families, and entities. Okay. That's the target market.
Okay.
But Cenote Capital aims to really bring Wall Street to South African investors.
Cool. Okay.
So the offshore investing has always been this sort of foreign thing for South Africans because we know, we spoke about ShopRite and Sun International and these local businesses, and we know them very well. But everything we use as South Africans are actually global businesses. We integrate, we touch, we use global businesses every day. And why not take the opportunity to be part of those businesses? An interesting stat that I usually discuss with my clients when I present to them or when I have review meetings is I show them the chart, and I don't have the chart with me now, but I've got the numbers. When I look at the benchmark, the global investment benchmark, which is the MSCI All Country World Index, you guys know the benchmark.
Yeah.
I look at the and just to give some color to the listeners, that's essentially looking at all the stocks in the world, weighting them according to market cap.
Yeah.
And then the largest companies in the world have the largest share of this benchmark.
Yeah. Right.
And when I look at the benchmark, the US makes up 66%.
That's right. Correct.
Of the MSCI All Country World Index.
Yeah. Correct. Yeah.
Then I tend to ask my clients, how much do they think South Africa makes up of the MSCI All Country World Index. And I mean, that's less than 1%.
Yeah.
So essentially what that means is if you've got a 2 or a 3% position in South of your net worth, of your total balance sheet or investment portfolio, if you've got a 2 or a 3% position in South Africa, you essentially double the benchmark weight. You double as bullish on the South African economy as the rest of the world.
But then, if someone would say that, no, Jacques, I totally get that that the highest concentration of that index is US based, but doesn't that give rise to concentration risk by having exposure to, for example, that benchmark? Like, are we not basically putting too much money on the United States at the moment, and doesn't that give rise to concentration risk?
No, I think that's a very good question, and I think that's on it's at the top of everyone's minds at the moment, because we and this is a very academical question actually. If you look at the efficient market hypothesis, which was thought of around 60 years ago. So finance as we know it today is only around 70 years old. Modern finance theory. The guys, Markovich, Farmer French, these founding names in finance developed all these theories only around 1950, 1960s.
Yeah.
So it's a very new industry that we actually at the forefront of finance today. And the efficient market hypothesis basically says that within an efficient financial system, most of the capital will go to the most profitable businesses.
Sure. Yeah.
The smart money will flow to the best companies. So as a investor, I guess my job and helping clients is to then ask the question, is the smart money really going to the best companies?
Yeah.
And I think a place like the US is a very efficient market.
I agree.
It's extremely efficient. The amount of analysts looking at Apple or Amazon or Nvidia.
Quite extensive.
It's extensive.
Yes.
But then we come to South Africa and we talk about Sun International.
Yeah.
And it's a very smaller group. So I think there's a big gap in South Africa for stock picking. But within the US, I think the market's so much more efficient.
Yeah,
quite right.
And that's that whole active passive discussion.
No, I think
right.
What's interesting is when we speak about is money flowing to the best companies out there, I think it's an interesting question because there's an assumption that investors are able to separate emotions to rationality, and which oftentimes is not really the case. That's why there's a whole lot of sentiments around it. I mean, I feel like there's an element of trust that plays in here, right? Perception around the trust on American companies is there in the market, right? And obviously driven by some of the things that we've seen in terms of things working,
yes.
A bit of accountability when there's corporate espionage and all of these things, right? So all these things kind of shape perception. And that's when you see capital moving towards where it's trusted, that is going to be used efficiently and as intended.
Yes.
So there's an element of perception that is in that. This is one of the things that we struggle with in our space, in the private space, that there's an element of perception risk that oftentimes is overblown for Africa. So such that capital doesn't actually flow in Africa, but it's because of the perception risk. And the investor return requirement for Africa becomes high because then you have this high perception risk that will be like, if I'm going to put my money in there, then I'm going to need higher returns, as opposed to if I was putting my money in the US, I know that I'm going to get returns. So, and I can trust the market and all of those things. So it's a bit of a difficult question to answer from a philosophical point of view when you actually study the behavior of investors in the market, right?
How I don't want to say counter that, but I want to maybe how I try to balance that is that I go to first principles, and Jacques mentioned it. You look at the fundamentals of the companies that are producing the highest earnings, right? In essence, what are we investing in? we are investing in an asset. Where is this asset? The asset happens to be in a market where it's very efficient. But then we go beyond that. How is the asset in itself performing? Is it robust? Are the controls around it okay? Is the environment okay? And if those answers check out, then that almost writes itself as an investment case and says go there. For example, let's look at the Magnificent Seven. The Magnificent Seven, what is it? It's Meta, Amazon, Alphabet, Tesla. What are the other three?
Google.
I mentioned Alphabet. Nvidia, yes. There's two more. But yeah, anyway, so those seven, for me, what I look at there, and I think it's also going to touch a little bit on your point, that there are some businesses within the Magnificent Seven of which, out of my own analysis, they are fundamentally sound. They're great businesses. They are they're cash generating. They've got robust earnings. And then there are some businesses in there, which I'm not sure if we can mention them, but one starts with a T.
Why can't we mention?
One starts with a T.
You make it sound more dodgy than it is, my mate.
It really is the case where I'm like, okay, I'm not really seeing a robust business model. I'm not seeing robust earnings, but yet that I don't know, there's a perception that there's a lot of value in it. So I think, yes, it is true that the perception does play a role in it, but I also think more than anything, we look at the fundamental performance of an asset. And I say that offshore, definitely.
I don't disagree with the fundamentals. I mean, the fundamentals are out there and it's easy. Like you said, these companies have a lot of coverage from analyst perspective, right? You've got different angles that are shaping the view about the companies, right? One of the things that I'm wary about valuations in the US is that you've got too much money chasing too few companies. And because there are few companies, valuation is always going to uptick because there's a supply of too much money. Capital is flowing into the US. Like right now, I've made example with Theranos from Elizabeth Holmes, right? She became a billionaire. Her company had never sold one product in the market. That's a valuation crisis. Why? Because there's too much money that is flowing that is willing to fund businesses because of perception, right? But obviously that's another aspect. But if we look at the fundamentals, there are companies that are doing well, that are shaping the market and all of that. I don't disagree with that. But I think there's quite a few dynamics when you look at the US as a market as a whole. I mean, you're an expert. I don't know what your views are on the US market. Like, do you think that when it comes to valuation, that's one of the critical thing that, given the flow of capital, it tends to be overblown because of that?
Look, I think within the US market and specifically investing globally, you need to have a clear goal and plan when allocating capital globally. So going out and randomly picking companies because everybody's talking about them, or they invented this new product, or we live in this world where we've got all this information constantly. Whether it's LinkedIn, our smartphones, TikTok, Instagram, ChatGPT. We live in a world of instant gratification.
Exactly, yeah.
And this is the behavioral side of it. So we tend to see people get rich fairly quickly because those are the success stories that are posted.
Like Zoom.
Like Zoom. Or for instance, post-COVID, a lot of these businesses started that leverage on people that are sitting at home doing, now people can't go out. And they're spending a lot of money on businesses, and these businesses suddenly, their valuations shoot to the roof. And you as a unsophisticated retail investor start chasing these names. And that's really when things can get ugly, is buying when the trend is too late. So there's this theory called the greatest fool theory.
Greatest fool.
The greatest fool. And when you look at all of the previous bubbles that played out in history, whether it's the tulip mania or a Bitcoin bubble or a
The housing bubble.
Housing bubble in the US, the tech bubble of the 2000s.
Yeah.
What the greatest fool theory says is you don't want to be the last person to buy at the top.
Yeah.
Because then essentially you are the greatest fool.
Yeah.
And that is when you allocate $1,000 or $10,000 and you never see that money actually return.
Yeah.
You never see that grow. And for me, that is the biggest risk of investing, is the permanent loss of capital. So not being able to recover your initial investment.
Yeah.
But so I completely agree with what you're saying about valuations. And it's critical to look at valuations before you buy a company.
Yeah.
But if the fundamentals support the valuation, if the business has a good management team, has a good track record, they've got a good pipeline of products, then valuation is more of a entry point or an exit point.
Yeah.
It's not the final determining factor whether I want to invest in the company.
Yeah, indeed.
And valuations tend to not, only when, as I mentioned, that this greatest fool theory, if you go buy at the top, you might never see returns. But other than that, valuations aren't the only factor that drive long-term investment returns, because valuations can stay high for extended periods of time.
True.
We've seen that.
Yeah.
We've seen that in the Mag 7. We've seen that in US markets, and a lot of market
even in the South African context, we've actually seen that.
I want, Jacques, you mentioned something about the Magnificent Seven, of which I want us to just zone in just a little bit more. We've seen those 7 companies, especially this year. There's been a bit of underperformance on those companies per se. A lot of it, in my view, has to do with Tesla, of which that's when we saw, I think, like at one stage, from the highs of post the Donald Trump election win to now, we saw some drastic underperformance and drop in serious share prices. Where are you with your thoughts on the Magnificent Seven? Just generally, do you think the underperformance is justified?
Yeah, we need to kind of post what my Magnificent Seven are, so that our people can follow the discussions. But yes, you can touch on that question, John.
Look, I think it's delivered such solid returns over the last, very long term. If I think about it, thinking back, one of the first stocks I actually personally bought when I started out in my career was Apple.
Okay,
that is it,
and that was 2017, and it was very foreign, because we as South Africans didn't have access to global investing. Today, there's easy equities. There's so many platforms to get that global exposure. But back then, it was quite hard.
Yeah.
And
a broker, all of those things. It was
a lot, man.
It was a messy process.
It was tough. But I didn't do any deep fundamental work on Apple back then. To be honest,
it's just a fantastic company when you look at it, right? It looks when you just look at it, it's like, okay, they're selling iPhones. There's a demand for iPhones. Yeah. They're selling iPads. There's a demand for iPads. Yeah. So why not?
Exactly. And I thought, I started seeing people use the product. It was initially iPods. iPods. Everybody wanted an iPod.
Yeah.
And bought an iPod, looked at the product, really liked it, and I thought this is a great product, and didn't really do a lot of fundamental work. And I allocated capital. That was where we now 7-8 years ago, and I still have the position. It's one of my best performing positions that I did, and a lot of South Africans said, "You're crazy. You don't know Apple," and I said, "Well, the guy that founded it, Steve Jobs, is one of the best entrepreneurs ever. This guy is fanatic about his business. He's not there anymore, but I still think that the management team's solid. And I've never really thought about selling that position, even today. Now today and what's interesting is I've actually abandoned Apple. I'm not an Apple user anymore.
Oh, is it?
I used to have an iPhone because they were the best.
Yeah. Where? Technology-wise,
tech-wise.
But I agree.
And then I started seeing all of these Chinese brands.
Yeah.
Xiaomi, Honor, Oppo, Huawei. And I had to upgrade after using Apple for what's...
The upgrade for me.
What's it, 10 years? And I went and I'm integrated in iOS. I know the software. I love it. Everybody in my family are Apple fanatics. They've got the earbuds, they've got the watches, they've got the laptops. So it's integrated. And I had to go upgrade and I saw the new iPhone and they said, this is what it's going to cost every month. I said, well, this is ridiculous. You know, I'm a South African. I'm earning in rands. But I need to pay for a product that's actually imported with dollars. You know? So those products are getting more expensive. You're seeing it with vehicles, German vehicles. More expensive for us as South Africans. So I said, I'm happy to own Apple shares, which will generate long-term returns.
Than a product.
But I can't afford it anymore. And then I started doing the research. And Xiaomi, which is a Chinese brand. Much cheaper. And the tech for me, when I did the analysis and I compared battery life, I looked at operating systems, I looked at cameras, I looked at charging time. 20 minutes to charge this phone at a third of the Apple's price. And I said, let's do Xiaomi.
Bro, Jacques, just to tell you something, you are speaking to the ethos of this podcast. You're not keen to own the product because of the price point, but you own the shares. That is fundamentally what we believe in. And that's the message that we're trying to send to people.
Absolutely.
You can't just like own the product, consume it. That's when you're consuming, right? But then if you own the shares, now you're owning a piece of the upside, potential upside, which is fundamentally, that's powerful. I find that so powerful. Yeah, man, that's
interesting. I think we've touched on some really good points around the Chinese as a global trendsetter right now. I read an article, I think about 2 days ago or so. They're saying that the Chinese electric vehicle BYD has reached 100 million or 100 billion sales ahead of Tesla, right? And Tesla was the guy in Europe, but BYD is now the guy in Europe, right? If you look at South Africa as well, if you look at Haval, if you look at what's the other ones?
Jaco.
All those different companies, right? They're kind of beating the sales for Mercedes-Benz, BMW, VW, and all these guys are complaining. And if you look at the tech stack for these companies, like they've got rear cameras. You go to an entrant VW, it's going to cost you 500K, but it doesn't have a rear camera. It doesn't have sensors. All those cars, they actually do this. So maybe to pose a question on you, Jacques, is how much of Chinese economy is a threat to the US globally right now?
Yeah, very, very pertinent and topical. I mean, as you mentioned, BYD taking over Tesla's sales. We spoke about Xiaomi and Apple. Xiaomi actually manufactures cars as well. So they do cell phones, they do cars. BYD does the EVs, and they actually...
I saw Huawei as well is doing cars. One of my friends was in China right now as we speak, and she was just showing me their showroom. They've got really cool cars. You get inside, you're like, this is world class. Like the interior is insane. I've never seen that beautiful interior. But go on, Jack.
No, I mean, BYD, for instance, I think it was last week, got a headline while I was sitting and working. They've released a new car that it's an EV, fully charged in, I think, 5 minutes.
Yes, I read that.
Fantastic.
So then you look at Tesla's share price on the day.
That's it.
Down 5%.
Yeah.
because direct competition to the US, and I mean this is a thing that we need to, as offshore investors, really have our finger on the pulse, because we saw it earlier this year with DeepSeek.
Yes, we did.
Yeah.
So I mean, obviously you guys know the artificial intelligence, ChatGPT, Grok, all of these AI models, which then ultimately use US software and US hardware, being GPUs and CPUs and the infrastructure to develop this tech that we're using every day as South Africans.
Yeah.
And now suddenly the Chinese come out and say they can do that. They can replicate it.
Faster, cheaper.
More efficient.
More efficient.
Yes.
Yeah. It's just something else. I'm always so in shock, man, about the Chinese, how faster they can replicate something. Yeah. It's just amazing, you know?
No, it's so don't write off the Chinese economy.
Yeah.
But I think it is important as a global investor to acknowledge that we are in a period of and I want to call it a technological Cold War between the East and the West.
That's an interesting concept.
Technological Cold War.
Yeah.
It's not a Cold War that we saw between the US and Russia in the 60s or 80s. Yes. This is a technological Cold War. And it's going to introduce a lot of volatility to global markets. But it will also introduce a lot of innovation.
Amazing.
Because the Chinese will try and compete with the Americans. And it's just gonna force them to innovate.
I've got another question. I think in that same breath, Jacques, we are mentioning a lot of China. We're mentioning a lot of the US, rightfully so. Where's Europe in all of this? I mean, Europe is in the broader sense part of the West, but Europe as an entity in itself. We're not speaking about Europe when it talks about developing their own LLMs. We're not speaking about Europe with the next innovation. We're not speaking about Europe with the deepest capital markets. Where do you see Europe in all of this? That's my first question. And then another question as well, because we're in this technological Cold War, as you coin it, how do the tariffs that the United States are imposing on others affect this war? Because we are in the business of moving products, right? Develop your technology, apply it, ship it off. Now you've got lots of tariffs in place, whether it's going in the United States or going out of the United States. So those are two questions. First one is Europe. Where is Europe in all of this? And the second one is, how are tariffs affecting this technological Cold War?
I think critical, and that's why global markets are so fascinating.
Yeah.
That's just bringing it back home to we're sitting in the southern point of Africa, Cape Town, but we've got this huge opportunity set. And that's really why I've got this passion for global markets, because it's not just one economy. You're looking at the world, and we are global citizens.
Exactly.
You get on a plane today and fly anywhere.
He flies more than most.
You're using global products. Seeing global people. Why not invest globally? Yeah. But back to your question, I think Europe, the way you asked it, they're actually sitting in the middle of geographically,
in the middle of the cold.
And that's how I see it. They are stuck between a rock and a hard place. Physically, they're in the middle of the US. You've got the Atlantic Ocean between them and the US, and then you've got Russia and China on their doorstep.
Yes.
And my perception of Europe is that they've sort of fallen behind over the last 5-10 years technologically. They're still very industrialized. And I think the reason, if you look back, it's different countries, but they form part of the European Union.
Yes.
And
minus the UK.
Minus the UK.
Except the UK, but they've got one currency as well, the euro. So they've got one monetary system, different fiscal systems.
Yes.
Economically, if you go back to Economics 101, that's a difficult concept to understand. Because fiscal policy needs to talk to monetary policy.
100%.
So now you've got the Germans doing their own thing in terms of fiscal, but they've got one currency.
Yes.
I think so Europe, still a global powerhouse. Obviously, in 2022, we had the Russian-Ukraine war that started, the conflict, which goes back basically to the original Cold War, where we had that division. And the Russians basically, if you look at the key geographical areas they want, it's close to the Black Sea, Crimea, Sevastopol, which is it's a harbor.
Yeah.
And that's really what Putin wants from Europe.
Yeah.
And there was a treaty that essentially said that naval base is Russia's. They're renting it from Ukraine. And as Ukraine sort of said it's their territory, Russia didn't like it. Remember, their naval ships in the north, it freezes up there.
Yeah.
So they can't launch submarines. They can't go into the water. Sevastopol is the only warm water base where they've got access. So that caused a lot of uncertainty in Europe. And it's still causing a lot of uncertainty. We recently saw this discussion between Zelensky and Trump in the White House.
Quite embarrassing, I think, that thing. Sorry. Yes.
Which was, I think those type of discussions should be behind closed doors.
Yes, I totally agree as well. The diplomacy of it all, it should be in all of that. I think if when you touch on tariffs, I think I'd like you to also speak about investors' confidence on Trump, the predictability, which is pretty much hard. Some of the policies and executive orders that he's made that you think have some sort of an impact in the American economy, such that kind of has a ripple effect on especially African context, because like you said, we consume their products. They still are pretty much are heavily invested either through aid or through FDI. FDI, whatever. So these are things that actually shape people's life on an everyday thing. So when you touch on some of this executive order, tariffs, whatever, like you can also just touch on the confidence of the investors on Trump's predictability policies, whatever. Yeah.
Yes. No, so I think ultimately we sit here as South Africans, I'm advocating there's a lot of good opportunities offshore.
Yes.
But now we need to decide, is it China, is it Europe, is it the US?
Agreed.
We're talking about these great businesses, great tech. And I think we are heading, as I said, this technological Cold War. I think we're heading into a period of deglobalization.
Okay.
Agreed. I can see that one, yeah.
We are.
Yeah.
We are heading into a period where each economy and government will look after their own interests ahead of other interests.
Yeah.
China's already doing that, by the way. I mean, they are a communistic regime. It's not a capitalistic market. So remember, when you allocate money to China, the government has the ultimate say of what's happening in that economy.
Exactly.
Despite the tech being cutting edge, there are ultimate powers who decide how that capital gets spent.
Yeah.
And that's a risk for me.
Yeah,
exactly.
It's a risk for clients. It's a risk for investors. But as you mentioned earlier, there's a risk premium attached to those investments.
Yeah.
Similarly in South Africa. So if you are willing to take the risk premium to get exposure to China, that's the risk.
Yeah.
Now we're looking at a world where Mr. Donald Trump is sitting in the Oval Office.
Yeah.
He had his first term and it was 4 years and then he didn't get elected again and now he's back for a second term. I think he won the election based on a promise that he'll put America first. America at all costs. America ahead of Europe, America ahead of China,
Canada, Mexico.
Yes, yes, and that's why he won this election, right? Because remember, the American people are very patriotic.
Very.
They love their country, same as us South Africans. We love it.
Yeah,
and he's very unpredictable.
Yeah.
He's extremely unpredictable. And that's potentially another risk premium that we now suddenly have in the US.
Quite right. No, well said. Yeah.
Which we didn't have 4 years ago.
Yeah.
So we need to educate global investors about the risk premium that's coming from the most powerful man in the world.
Yes.
He's the main man. Whatever he says goes at the moment.
Yeah.
For now.
Yeah.
For now, yeah.
And that's a risk premium.
It's interesting. I think I looked at the VIX, the volatility index, and I was looking at it from, in fact, most of my risk indicators, the metrics that I look at to gauge where global financial investment risks are coming from. I looked at it from the period of the beginning of this year to where we are at the moment, and the VIX literally has gone so high, which indicates a lot of volatility and uncertainty, which is a shame because, like with the United States, as much as how he did come with the promise of, listen, he's going to put America first, there was an element of that. This president is pro-business. The party that he represents, the Republican Party, are conservative. So there's going to be an element of business certainty, business first, America first, and all of that. And by just is executive ordering tariffs up and down the place, I think it's kind of like shooting yourself in the foot, because a lot of the things that were going to help the United States, it's actually harming the United States, I would argue. It's in the form of the unnecessary risk premium. The United States is supposed to be stable. It's supposed to be the most stable.
Yeah.
At the moment, there's no stability at the moment.
Yeah. No, I agree. So, like, maybe you can explain to some of our investors out there, like, how do tariff works, and why does Trump actually use it as a weapon,
as a bargaining chip?
Yeah, because he basically wants people to bend by using tariffs. Like, for example, he was threatening 100% tariffs for some of the European countries and African countries that would ally with what he called American enemies. So why is it that Trump thinks that tariffs are a weapon and all those things,
Yeah, I think Trump knows that. I think it's important to look at the fundamentals around the US economy.
Yeah.
70% of the US economy is based on consumption.
Yeah.
That GDP. It's a consumption economy.
Yeah.
The other 30% is a combination of production, manufacturing.
Yeah.
But if the US doesn't consume, that economy doesn't grow.
Yeah.
And what do they consume? They consume imported goods.
Yeah.
For instance, Apple. Apple is an American company, but it's produced in China. So it's designed in California, produced in China, and then sold in the US.
Yeah.
What a tariff essentially is any imported good that's not manufactured, produced in the US, as soon as that gets through customs, there's an additional price that you pay on that. And that goes to the government.
Yeah.
So if you paid $100 for a pair of Nike shoes, that Nike shoe is produced in China, shipped across to the US. As soon as it goes through customs, that new shoe costs $125.
Yeah.
But 25% or the $25 goes to the US government.
Yeah.
So it's a tax on importers, on businesses.
But who pays it?
The consumer.
Yeah.
The consumer.
I.e. the American citizen.
The American citizen.
Yeah.
Pays
then
it.
why is it that Trump thinks that this is a weapon that he can use?
Well, I think he knows that the economy is consumption based, and because all of these businesses have set up production outside of the US because it's cheaper, labor's cheaper, input costs are cheaper. He wants to bring those jobs back to the US.
Okay.
So he wants to pressure businesses
to set up manufacturing
in the US. In the US, bring US industrial production back, and we've started seeing that. We saw big investments from Taiwan Semiconductor, who does semiconductor manufacturing. They've committed large capital investments in the US. We've seen that from the likes of Apple, Hyundai, car manufacturers, steel manufacturers. So essentially, it is a tax on the consumer. And the big risk market participants are concerned about, and I mean, we spoke about the VIX index, that volatility index, how high it is at the moment. It's because investors are uncertain about the impact of tariffs on inflation as well as growth. Because as a consumer, will you be able to pay $25 more for that exact same pair of Nike shoes?
Nike shoes, No, agreed. I think it's an interesting concept, and I think it's a double-edged sword as well. I mean, you can definitely kind of foster the advancement and implementation of manufacturing facilities within the country, but also you kind of deter any technology that could come out from other areas, especially China. I mean, there's no doubt that the US utilizes Chinese technology to advance all of that stuff. So it's that as well, and also just the cost for businesses now also increases, right?
Absolutely.
Because there are businesses that, from an input perspective, depend on imports, right? And they do that because they cannot bear that fixed cost of actually implementing their own manufacturing. They kind of outsource that part, and that what makes that business thrive in the first place, right? So it's kind of a double-edged sword that needs to be done with a little bit of certainty, predictability element into it.
I've got a last question from my side. Sorry to jump in there, but you mentioned something interesting about how it also raises costs for business, especially on the input front. Immediately for me, I think about inflation. I'm not sure if you've touched inflation. Sorry, I had to run to the bathroom. Basically, inflation. I know we just recently come out of a vicious cycle, I would add, of
low inflation cycle.
Previously, just after COVID. So when they said that inflation was transitory,
yes,
but yet it was not. So it lingered for longer. Doesn't the risk that tariffs has or brings with it higher inflation?
Absolutely.
Well,
I mean, I think that's we as a global investor, once again, you need to look at Donald Trump's plan. You need to understand what he wants to do, and he wants to bring down oil prices as well. So inflation is one of the most critical indicators out there. Inflation and interest rates. Because the Federal Reserve in the US, they've got a dual mandate.
Yes, they do. Employment and also inflation.
Absolutely. They want to get inflation down to 2%, and full employment is 5% in the US. I mean, the unemployment rate, it's currently 4.1%. So that economy is fully employed.
It's pumping.
It's fully employed. Inflation's currently hovering 2.7, 2.8%. So it's close to 2. Fed funds rate, which is their repo
rate,
it's roughly 4.25 to 4.5%. So it's still elevated. It's still above inflation. And as a
do they have a typical target?
2.
It's like 2%, right?
Well, I mean, inflation's 2. So when inflation target is 2, inflation currently 2.7, 2.8. Fed funds
needs to be higher. To bring it down.
Yes.
In order to stimulate that economy and keep it going, you need to at some point cut interest rates.
True.
Because interest rates are the primary input in valuing an asset. When I try and at Cenote look at what is a company worth, the cost of capital is the interest rate, because that's the risk-free rate of return. So the higher the interest rate, the lower the intrinsic value of an asset, because I can go park my client's money in cash, get a high return. Same with valuing a property. If you want to buy a property in Cape Town, you say, well, what is the potential rental income I can get divided by the cost of borrowing the money? That should be the present value of the property.
Yeah.
Now, Cape Town is very different. Then
we spoke about this.
Then, for instance,
the fundamentals are not making sense. Yeah,
fundamentals aren't making sense.
Equation is not equation.
But the lower I can borrow money, or the lower the risk-free rate of interest, the more valuable, the higher the intrinsic value of a company when I discount it. And when the Fed or the Reserve Bank in South Africa says they're not going to cut interest rates because inflation's too high, suddenly assets aren't on paper as valuable as they used to be in a low interest rate environment. So getting your inflation call right over the next 4 years will be vital to understanding where the good investments will be.
Epic.
I think it's quite a critical component. I think especially the South African context, I think I'm always so pissed with SAB because I'm like, we experiencing load shedding, right? It's already the cost of doing business in South African context is difficult and expensive because you need stable power. In order to do that, you need alternative power because Eskom can just wake up today and say, I don't have enough power to give to everyone, right? And that means businesses now have to struggle to can't find alternative power to keep the lights on and operate, right? If you lose, like in 2022, we had the most amount of load shedding, for example, right? Imagine the amount of growth in GDP was lost from a production perspective, given that amount of load shedding, right? But obviously, if you want to keep the business alive, you need to incur more costs by putting a solar, for example.
But what does that have to do with the
running all of those things? Huh?
But what does that have to do with the SAB, with the Reserve Bank?
Because then they keep the interest rate high, making it even more difficult for businesses to borrow.
But inflation is high.
It's not high now, is it?
No, but
it's not high.
You spoke about 20 and maybe.
No, I'm talking about now that even now, the cutting of the interest rate has only been 25 basis points twice.
Yeah.
For me, that doesn't make sense.
Yeah.
Inflation has been so low and has not been, the cutting of interest has not followed suit. That's what I'm saying, right?
I agree with you, especially now. I agree with you. As far as the magnitude of the cutting of the rate, I agree with you, especially not this previous one. The one before this, the MPC meeting,
yes,
they cut it down by
25.
By 25, and I agree with you with the magnitude. But however, I also do think that we need to have an understanding of what the Reserve Bank mandate is. And if the issue is with the mandate that it should incorporate the dual mandate, like the U.S. Federal Reserve, of not just focusing on employment, but also not just focusing on monetary policy, but also focusing on employment. So inflation targeting and employment. Then have that argument. But you can't really blame the South African Reserve Bank for sticking with their mandate and targeting inflation.
But be that as it may, right? Inflation is demand led and also cost push, right? I feel like the South African Reserve Bank, there is not too much emphasis on the cost side of it.
I think just to chime in here, I think my view is, and I agree, I think I'm more on your side, that the Reserve Bank has been too cautious.
Yeah,
I agree with you. And
it's. I also agree with the fact that we've got a single mandate. Yeah. It's inflation, 3 to 6%.
Yes,
it's not economic growth. It's not unemployment.
That's it.
Our unemployment rate, the official number is around 31%.
That's it.
I like to look at the expanded version, which means that those are people that have stopped looking for work.
Yeah,
it's north of 40%.
Yeah.
Okay, so the Reserve Bank, what unfortunately ties their hands is the rand. Because we are a net importer, we import a lot of the goods we consume.
Yeah,
I'm not talking about commodities. We export commodities, and that's a strong industry, the mining industry. That's why it's such a critical part of our local economy. But we spoke about Apple and all the Chinese goods we import.
Yeah.
we need to pay for those imports with rands.
Sure. Yeah.
The weaker the rand is, the more expensive those goods get.
100%.
I recently did an analysis, and the rand dollar exchange rate over the last 5 years per annum, 5% depreciation.
Yeah.
It's 35%.
Yeah. That's wow.
35% that you could have made in rands just by buying US dollars. We haven't picked a stock yet.
Yeah.
5 years ago,
cash.
Just
5 years
open
ago,
up a bank account.
Open up a bank account, buy US dollars. Now, I'm not saying this is going to continue indefinitely.
Yeah.
But we are a price taker, South Africa. Yeah. We exposed to exogenous shocks.
Yes, true.
If the US sneezes, the rest of the world catches a cold.
Yeah.
You're right, Jacques.
5% per annum risk-free just by currency for the last 5 years.
Yeah.
Add on Apple, add on the Mag 7.
Yeah. Add on Nvidia.
It becomes a no-brainer.
Yeah.
But you're living in South Africa. You're living in a great country, Cape Town. But you've got global exposure. It's a no-brainer.
I think it's one of between Nico and I is one of the most contentious points around interest rate.
But mate, I really think maybe like we're discussing two different things with the Reserve Bank when let's look at the mandate.
No, I get the mandate.
And I think if you're looking at how dovish or how hawkish the MPC is.
Yeah.
Mate, I think I agree with you to a large extent as to the magnitude of these rate cuts and rate increases sometimes when necessary. I largely agree with you. I just don't agree that a central bank is especially in our current, is responsible for overall economic growth. It's not.
No, I agree. I understand the mandate, right? But it's the same people that you're protecting. Right? You can't divorce the two and think it doesn't have a ripple effect. I mean, inflation on its own that you're trying to control obviously has ripple effects across the board. It's like a beetroot. It spills across the board,
it's all
right?
Connected.
Yeah, it's all connected. Yours, it's not your mandate, but obviously you should also have that at the back of your mind that it consider that. Let me ask you this, right? Do you think that historically the Reserve Bank has been cautious, has like if you look at historical decisions that they've made from an MPC perspective, do you think they've been cautious? They have a history of being cautious, too cautious.
Well, again, I think I like operating in an economy when you don't get what do they call them? Rogue central bankers. I don't want cowboys, bro. I really don't want, especially for such an institution that dictates the beetroot as it's I don't want like wild cowboy. I like predictability and I like a steady, stable, that type of thing. Where I saw a bit of aggression in how it was during COVID. I speak under correction, but the South African Reserve Bank was the first. It was one of the first central banks during the deep of the COVID pandemic to cut rates. But no one but no one says that. But to answer your point is that, do I think they've been cautious? Yes. Do I think it's a good thing? Yes. And then on the economic growth thing, load shedding, lack of service delivery, political uncertainty, that is what's undermining a lot of the issues. That's the way that I view it.
But that's cost, right? That's from the cost side, right? If you look at it, that's not demand, right?
Mate, lack of electricity. The reason why we spoke about it ad nauseum, bro. A lot of our companies that we had here, the reason why the earnings were not coming together was because of flipping Transnet. Okay, it was Transnet, bro.
Yes.
So fix Transnet, a lot of the earnings that disappeared comes back.
And I mean, then you can see if that happens, the Reserve Bank can be more accommodative.
Yes.
And I think that's the beauty of monetary and fiscal policy. They need to work hand in hand. And I want to commend the Reserve Bank. I think they're one of the best institutions in South Africa. They stayed fast. Lesetja Kenyago has a stable hand, as you said. And monetary policy is pulling the weight, unfortunately, because of our fiscal policy hasn't been.
I agree 100%.
And that's a whole different debate.
Yeah,
we can sit here for
hours and debate.
We can do another show about it.
But no,
I totally agree. I think it's interesting stuff. So looking at the global aspect, right? Maybe to put it on a point blank perspective, right? Where do you think the growth is going to come from? Right? Is it the US? Is it China? And what's where you leaning towards? Are you leaning towards China? Are you leaning towards the US? I mean, Europe is a bit of a different aspect, given that they're so far ahead behind from everyone. From a technology perspective, they still have the infrastructure, like you mentioned, but from a technology perspective, they been leapfrogging the US and China, right? So where are you leading from a growth perspective, the US or China, when you speak to your investors? And also, if we look at the stocks perspective, right? What are some of what is on your buy list right now globally?
Yeah, I think that's a great question. I think it depends client to client.
Yeah.
I don't want to take a blanket approach because it depends on your risk profile, your investment horizon. And if you, as we spoke about these risk premiums, if you want to take on the risk premium, I'm seeing great opportunities in China. We spoke about the technology. It's state of the art, good brands, but you need to be aware of the risk premium. So good opportunities in China, but you need to take a long-term view. The Chinese government is taking a long-term view with their economy. And as an investor, you should too. I think we saw that with Naspers, their investment in Tencent back in the day. Took ages to play out, but it's a key asset.
It is.
And they got early exposure into that key asset. I think the US is a much more predictable market. So that's why I like the US more, because I think the environment used to be fairly certain and easier to predict. Now we're also seeing some more risk premiums with the new administration.
Quite right, yeah.
And we need to acknowledge it's a transitionary period between an old administration and a new administration. There's going to be some hiccups. And some teething. My advice would be stay the course. Stay where the most capital, the smart money is going. I think the volatility will be short-lived. I think we're going to have more clarity in the next 3 to 6 months on Trump's policies. He's going to have to start thinking about his term going forward and how much noise can he still make. I think he'll tone it down. I think he's got smart people around him. And they're going to start putting pressure on him to get the plan together. I think it's a transitionary period. Great companies in the US. I like to think of the opportunities as themes. So I think themes in AI, which is obviously something we all know, it's a big discussion point. But the big names in AI, as well as some smaller names. Cybersecurity is a big theme that I think will catch up to AI. So in AI, you've got the hardware, which produces the semiconductors, but now we're seeing the software names actually catch up. So I think that's an opportunity. And then you've got these big bellwethers in the US, the big retailers, you know. I'm looking at a specific retailer at the moment where how do you hedge their global, that trade war tariff risk? Most of their goods are produced in the US. So avoiding companies that are importing because they're going to be affected more by this trade uncertainty and shifting the portfolio towards still great companies that have a lot of customers in the US, but the goods they sell are actually produced within the US. So they're sort of isolated. And that I think minimalizes or reduces the short-term volatility. And then when we've got a bit more certainty, I think big names like Mag 7 for retail investors are still a good space to be in, but understand what you're investing in, partner with the right people.
Sure.
Don't just follow any trend out there because you don't want to be the greatest fool.
Okay. And I see you avoiding kind of mentioning specific companies, but let me just ask this one, right? So what it has been, I think your greatest investment was Apple, right? We already touched on that. what has been your worst investment personally? I think we have mentioned ours. Mine was Steinhoff. I lost quite a bit. I still am invested in kind of way. So I was just like, I lost my money, but I can't remember, what was yours again?
I had a few, mate.
I think you on the podcast you sold Sasol, right?
Oh yeah, no, I sold it too early.
Yeah. You sold Sasol.
I sold it too early.
So, what has been your worst investment? And
I think the worst investment I made was chasing a trend. So being late to a theme or a name, and it was a semiconductor manufacturer in the US, a US company.
Yeah.
Which not Intel. Supermicro Computer. SMCI.
Yeah.
I thought they were going to be the next big name out there. And my strategy usually is I start very small in a position. So I like to screen for a lot of companies, but I start very small. And as those companies continue to deliver, I build up the position. So I was lucky that I started a very small position.
Yeah.
Made a bit of money, and then things started going south for Supermicro. I got out, luckily, fairly early compared to where the price is today. They are going through a period now where their financial statements were rejected in the US by the SEC.
Dang it.
Their auditors walked away.
Oh no.
And they've got there is the risk of a potential delisting, which then means your assets are frozen.
Yeah.
You don't get your money out.
Your money out, yeah.
And when that news broke, I was already out of the stock just because I saw the price action and it wasn't looking good. But that's typically a stock that I'm glad I got out of. Nike, another one. I was a long-term investor in Nike.
Yeah.
I probably bought too late as well.
Okay.
After a lot of the easy money was made, held onto it, saw the business struggling.
Yes.
Saw other competitors coming in. Hoka.
Yeah.
On.
Yeah.
Cutthroat industry.
Yeah, it is.
And Nike was just not focused.
Jacques, in your view, what is the characteristic, or rather, what is the underlying very, very important characteristics that any good investor should have?
Sure. I think a combination of patience and conviction. You need to have both, because if you've got the conviction in something and you've done the work and it doesn't work out as you saw it a week later or a month later, don't let go of the patience, because trust your conviction. And then I think it's so blending patience and conviction, because if you've got the conviction, you did the work on a company, and you want to have your capital in there, you want to have your client's capital in there, but also the adaptability then, because there's so many behavioral biases where now I did the work, being patient, but it isn't working out. At some point, you have to step back and say, this wasn't a good investment. Let's get out of it. There's other opportunities out there. So being patient, high conviction, and adaptability.
Okay, cool. That's a good one. Okay, so I think we can sit here and discuss for quite a long time. I think there's been interesting discussions.
It's been great.
So maybe just to part off the discussions and close it off, would be interesting to hear, Nico, what's on your buy list now in South Africa or abroad, what you're looking at, and also yours, Jacques, what's your buy list in South Africa and globally? I can start. In South African context, what am I looking at? I'm looking at Boxer. That's one of the companies that I'm looking at. And I've been looking at Vodacom as well. It's been doing pretty well. Just looking at when the right time to enter. Globally, I've been following Tesla a lot to see what's going to happen. The valuation right now looks a little bit attractive from where it was a couple of months ago. So it will be interesting to see once the storm that is happening, because people are taking Teslas in the US and people are unhappy with the founder being politically too exposed and the likes. But with such risk presents opportunities, but you have to understand the risk. All right. Yeah. So that's one of the companies that I'm looking at, and also Netflix. Just looking at, they've been doing some really good investments and putting on some really good strategies around expansion and growing their user base. So just looking at those kind of stocks, those are the ones that I'm looking at. Not really yet buy, but it's the companies that I think
watch list
at the right value. I'm probably gonna be entering. I just need to make sure when is the right time to enter. But I think those are companies that I think presents opportunities globally and locally.
Okay. For me, locally, nothing at the moment. I think I'm okay with the look. But I am looking at I'm looking at a market. I haven't zoned in on a specific company, but I am looking at the market. I'm looking at the European market. I just think
that's an interesting one. It's not every day you hear people talk about Europe.
Exactly. So my thinking there is that normally there's a lot of overreaction. Whenever too many people are saying the same thing, I'm thinking that there's not much opportunity there.
So you're a contrarian investor now, yeah?
I wouldn't go that far, but it's just that just a bit of things speaking. I mean, I was watching the World Economic Forum closely. I was watching the World Economic Forum, and the only thing that they were speaking about is how bad Europe is. I've seen lots of structural adjustments that are taking place in Europe. The European leaders, they're talking a little bit more as far as unifying capital markets, which I think that is a positive. So my watch list, I'm not quite sure yet, but I'm looking at Europe. I'm definitely looking at maybe something in the UK or maybe something in the Eurozone. But it's Europe at the moment. That's where I'm looking at. Maybe in the next episode, I would have done something. But my portfolio at the moment with my local stuff, I think that's okay at the moment. My Ram Grow is doing well. My Boxer is now doing well. That type of thing. Yeah.
Wonderful. And Jacques?
And that's off, mate.
Yeah, I think locally nothing that I'm seeing that's shouting it's a bargain at the moment. The offshore market is my bread and butter, and that's what I like. So the two opportunities that I really like at the moment is gold.
Okay.
Really like gold.
But it's at all-time high now. It's over 3,000.
It's over $3,000 an ounce. It's up 16% in dollars on the year.
Do you think what do you think is driving the price now? Is it the global uncertainty? Because I know it's regarded as insurance.
Yes, a safe haven.
So is that where people are kind of moving towards kind of like leaving out the uncertainty from the US?
So gold is a very fascinating one, and I mean it's unconventional because it's a commodity, but it's got there's only so much supply in the world. And most of it's already been mined. So the cost of mining gold is very high at the moment. So I like to buy gold as a hedge in portfolios. So even though it's not a stock or equity, it doesn't pay dividends, it doesn't manufacture anything. It's a gold. I buy the gold ETF in the US. It's called GLD is the ticker. It's the largest gold ETF in the world. They physically hold the gold bars in their vaults. So you as an investor, by buying a gold GLD stock or unit in the ETF, you've got a share of that gold under the vaults in New York City. I think a lot of geopolitical uncertainty around Russia, Ukraine, trade wars, inflation. So it's a nice position to bring into portfolios alongside your riskier type assets.
Quite right,
And it's done very well. It's up 16% on the year. I started a position about 18 months ago in gold. It's done. It's worked.
It's done well for you. Yeah.
And I'm still a buyer.
Okay.
Should probably start
even at this high price.
At these levels. I would nibble at gold. I'll continue to nibble. Maybe wait till it falls back to $3,000. But it seems like it touched that 3,000 level, which was a big psychological resistance point.
Exactly.
Touched it, fell below it, and now it's broken out decisively.
Yeah.
And I think that momentum will continue. Okay. If you don't want to play gold, silver is a good alternative.
Yeah.
It's much cheaper. And silver's actually got a lot of industrial uses in solar, solar panels, as well as EVs, where gold isn't used in any industrial production. So silver is also a position that I actually started the last 2-3 months.
Okay.
But gold's the big one everybody's talking about. So I think gold for me is still high in my buy list. And then in stock specific, I think the company that I'm looking at closely at the moment is Uber.
Uber.
Okay.
You think they've gone through their turmoil, it's passed with their founders and all of those things?
I think they went through a tough spot. Didn't own it back then. So with new management at the moment, financials are looking very good. Fundamentals are looking good. Company isn't expensive. I think it's a growth company that you're getting at a decent valuation.
Yeah.
I think with autonomous vehicles, self-driving, we know robo-taxis are on the horizon.
Yeah.
I think Tesla is going to have a lot of competition from Uber in terms of self-driving.
Yeah.
Sure.
So imagine a world where you live in Cape Town, you don't own a car. You've got an app. You could buy one of these robo-taxis and you rent it out to Uber and or to this ecosystem. And
wait, so sorry to cut you, but is the Uber model from a self-driving taxi that it works the same way as me having my own car, then I give it to Uber to kind of manage, or is that still the same model that then now Uber doesn't incur any fixed upfront investment?
correct.
That's brilliant.
So you buy a autonomous vehicle from Waymo or from Tesla.
Yeah.
And you use the Uber ecosystem to generate income for you. So you've got the car, you rent it out to Uber, or you own the car, the ecosystem, and you tap into Uber's ecosystem. And somebody in Cape Town wants to drive from, let's say, Greenpoint to the southern suburbs. They've got a client meeting. They don't own a car. They log on to Uber and they say they want to be picked up at 9:00 in the morning. That autonomous vehicle is parked somewhere in an industrial warehouse, whatever. It's an EV. It drives. It drives to your pickup location at 10. It picks you up. You get in. You're reading paper in the back of the car. You're drinking your coffee. Drops you off at the office. You, as the owner of the car, have made money from this drive in collaboration with Uber. And that car also knows when to go and charge itself. It goes back to the warehouse, charges itself, and then continues with these trips.
Who pays for the warehouse?
Probably Uber, because they're providing the infrastructure. It's a cost they're not having at the moment. But I think when I look at Tesla's valuation, it's trading on a PE of north of 100.
Yeah,
it's very expensive.
That's too expensive. Yeah.
They've got the tech, but they don't necessarily have the self-drive or the ecosystem. You know, we all in South Africa, we've got Uber on our phones, right? So I think there's a potential partnership coming down the line. I think that competition is going to be very stiff
between Uber, potential collaboration between Uber and Tesla.
Uber, Tesla, look at that space. Stiff competition. Google owns, Alphabet owns Waymo, which is also a self-driving business in the US. But in terms of valuations, I just think Uber's
attractive,
very attractive.
Amazing.
Interesting. Okay. I think, Thanks, Jacques. I think this has been an interesting conversation. I want to keep going, but
I can see.
But I think we're definitely going to have you back at some point.
Bro, this was a masterclass.
It was a very interesting aspect to kind of hear from a global perspective. I mean, I'm not a global expert, but I do read the news here and there. Kind of follow the US quite a lot because, I mean, like you said, if it sneezes, everyone catches a cold. And it's a quite interesting aspect. But maybe one last final parting point. What is your advice for someone out there that is thinking, Jesus, man, I think there's no more growth in South Africa. I want to look offshore. What is your advice in terms of how to go about it in the first place?
Yes.
Oh, good question. I think start investing offshore immediately. Don't think about it. I'm going to start in 10 years or in 15 years. Remember, Warren Buffett made 90% of his net worth after the age of 80. He's 94 today. He waited 80 years to make 90% of his net worth. So start today. Don't delay until you've got the capital. Start with the capital you've got.
Yeah.
Because that builds that long-term wealth.
100%.
That's the first bit of advice. The second bit of advice is partner with the right people. It's a big world out there.
Like Cenote Capital.
Walk a path with somebody you trust, and that's got the global expertise to navigate you through a world of uncertainty. Starting out as a retail investor, make sure you're not chasing trends. Don't buy what everybody's saying to buy out there, because you're not going to have a great experience. And for me, the biggest thing I want to see in this industry is people having great experiences from investing. You know, spreading the word.
We share that.
Compound interest is the eighth wonder of the world.
Yeah, that's a good one.
but do your work, speak to the right people. And you're gonna have such a good time investing offshore. You're gonna be a global investor.
Amazing.
And how do people get hold of you? And who can approach Cenote Capital? Is it anybody in the streets? Is it who can approach? Who do you partner with? Who do you assist? What are your fees? All those things. Yeah.
Look, my business is still young. It's in its infancy. It's in its early stages, and I'm open to working with anybody out there. You know, if it's retail investors, the market is higher net worth individuals. So folks that are entrepreneurs. They've made their money in South Africa. They established businesses, and now they want to diversify offshore. That's the target market. But happy to have a coffee with anybody. Have a call, discuss markets. I mean, that's what I love to do. But the entrepreneurs that have made their money in South Africa and they've got that excess capital, thinking about the next generation, you know, your kids, their kids. That's the type of investments that excite me.
Jacques, we need you here again, man. There's so much content, but thank you so much.
Definitely do. But how do people get hold of you? LinkedIn?
I'm on LinkedIn.
Instagram, Facebook, Twitter, TikTok these days. Do people dance and reach out and you?
Look, TikTok. I don't know if it's the best investment platform. I'm sure there are investors on there. I've never seen.
Dance for some returns.
My wife's got she's on TikTok and I like watching videos with her. I'm not on there. But in short, you can follow my personal page on Instagram. Sometimes post some investment stuff there. LinkedIn is really where I'm quite active on LinkedIn, and then website will be launching shortly. So look out for Cenote's website. Offices are based in Woodstock, Cape Town, so it's close, it's central. Reach out on.
Send us some of your stuff, man. I mean, like for us also, we're always keen to partner with exciting people that are doing exciting things in the investment space.
And how big is your team?
It's just myself at the moment. So it's me. I've partnered with 2 global research houses that are based in the US.
Okay.
So my clients have that global access. You know, it's I'm in Cape Town, but these research houses basically, there's a team of economic guys, PhDs, sell side research guys that I tap into to sort of bounce the ideas around.
Cool.
So that's the promise of, you know, bringing Wall Street to South Africa, to Cape Town, and I can't do it alone. You know, it's partnering with the right teams. They're on the ground in the US. If I've got any questions, I speak to them, and my clients have direct access to them. That's one of the services. Yeah.
Okay.
Wonderful. I think it would be interesting to hear from you 12 months down the line how the business is going, and how much of this Wall Street have you brought to South Africa, and how much of access have you brought to a lot of South African investors. But great work, man, and thank you very much for coming through.
Appreciate it.
I think Nico, I always say Nico always picks the right and the best guests.
I do. Yes. Yes. I take full responsibility for that statement. Full responsibility.
Anything from you, Nico, for parting?
Nah, oh, good stuff, man. I think we're gonna chat more offline. Like, I'm really serious. I've also about partnerships and partnering up with people that are doing exciting things.
Yeah.
I'm keen for more connection, coffee, and send us some of your stuff, man. We would gladly publish it on some of our platforms as well.
Thanks, guys, for having me, and thanks for the platform and the opportunity. And you guys are doing a great job in promoting investing.
Yeah.
So keep up the good work.
Thanks. Cool. Definitely.
Thank you.
That's it. Episode 19. Please like, subscribe, and comment. And if you have any questions, you can send them through. Our guests typically do answer these questions. So by all means, send them through. And that's it. So Matt, cut.
Cut.